All right, guys, let's have a look at Pfizer, PFE. So that's the name today. So 2672. I don't remember if I talked about this name in the past. Mainly, it's here tech growth, big names, but this is a $151 billion stock, currently trading at $26.72, and also this is a high dividend yield stock, so 6.29, so 6.3% dividend yield. So is this a value trap? So I could have played this play. Probably I could have played TLT as well. But instead, on Friday, I saw this name. It was coming down because they paid a dividend. So stock gap down. It was coming down. I'm like, okay, I'll throw a little bit of money in this one. So I went ahead. Again, I have no big expectations for that play at all, and grabbed January, very cheap, very little, like $1,000 position in 2250, just as a disclosure, right? So this is very big move, anticipation, because technically what I'm saying that is in terms of option market going into January, implying $2.63. That's around 10% move. And I'm saying that it might move down a little bit more. So year-to-date stock is down 7.2%. And I'm going to show you a yearly chart of this stock. So you can see COVID, pump, crazy move to 67. And then last 3 years, anybody who bought last 3 years for dividends sake, they're deep underwater. Stock is down from its highs, probably like 60%. Let's measure how much is it down to this point. So from its highs, it's about 57%. So all that dividend collected can go straight out of the window, right? At that point, including the inflation out there, and I'm going to show a few things why this stock is coming down. So a lot of people were commenting this in the Discord as well, and it's just very surface level. I didn't have to spend too much time to look up this information. So before, we're going to take a look at the heat map of the price to earnings, right? So yeah, there are healthcare drug manufacturers that are less PEs out there, much higher PEs. So we can just take a look at the healthcare, where Pfizer has, give or take, 36 PE, Amgen 41, Merck 21, AbbVie 70, Johnson & Johnson 25, Eli Lilly 90, and you can see Biogen down there like 50. So it's not high, it's not low, but historically, if we just take a look at Pfizer's its own historic, let's say 5-year average, it's trading a lot lower, right? But there are a few more things. What's going on? And it has to do with Pfizer's interest payments. Okay, so I'm not looking at the past earnings or like last quarter. They reported pretty good earnings, but stock is still coming down. These are quarterly payments, interest payments of Pfizer. And if you are out there thinking that we're going to go back to zero rates and companies are going to be borrowing crazy again at those rates, no, we're not going back to this. They were paying what? They were servicing debt at 300 million. Now they're paying 700, 790, 778, 784 interest alone every quarter. And also, look at the margins, right? Okay, this is basically revenue, right? So during COVID, we had pretty crazy run up all the way to almost 100 billion. And now you can say it's normalizing, right? But 54, 55, we're back to 2017, 2018 levels of revenue. But look at the EBITDA. It's not back to 2017 or 2018 of levels. EBITDA declining 3 consecutive quarters. Margin, EBITDA, look at it. Right? Revenue, okay, well, no problem. So, price to cash flow. Price to free cash flow ratio. Even at these prices, this stock is a bit pricey. Look at it. Yeah. They have a free cash flow of 84 cents, 87, 84 versus back in 2018, 2016. It was pretty stable, right? From all the way 2014 all the way to 2020, upwards of $2. That's where your interest is going, right? That's where the money is going, free cash flow. That's where it's going. They have to pay all those interest expenses. Crazy. And here's the 10-year treasury bond. This is not going back to where it was. Let's go back 10 years, right? Even if it goes back to, this is 25, looking at from 20, let's peak of 2023, 2013, 2018, it was 3%, 10-year bond. But it was peak, right? But let's say on average, it was around hovering around 2.3% or so. But during that time in US, we barely had any inflation, okay? It was very, very low inflation, okay? 2% target, that's Fed's goal. And they probably want to bring down Fed funds rate to around 3% or so. So right now, what is it, 4 point something? But even then, inflation is not going anywhere, and high interest rates are not going anywhere. Okay, they don't want to deal with deflation anymore, so there will be an inflation. So my point is, look at this chart. Wherever, so this is the chart of Pfizer. Okay. Look at this is daily chart, okay? Now, I'm going to compare this. It's going to be a very short video, actually, so we're almost done here. So, I'm going to lay over TLT, okay? TLT bonds chart. Look at this chart. This blue right here, this is our TLT. We go down, stock goes down, we goes a little bit higher, stock goes up, TLT dumps 2023, Pfizer dumps, TLT kind of moves sideways, and then last, you can zoom into 2024, look at it. So, yeah, TLT is hovering around here, but if you think that bonds are going to go lower and bond yields going to go higher despite Fed cutting rates, we just cut rates, okay? You can be 100% sure that the Pfizer, high yielding stocks, many stocks actually, at this point, Pfizer being a value trap, it will go down with it. It has been mirroring it perfectly. And I showed you guys already, this is not the same environment. Even if the rates are going back to, even if TLT goes up, if the bonds go up and the yields normalize, let's say at around 3.5 or maybe 3.8, maybe 4, right? We're at 4.3 on a 10-year. Their interest payments are not going to differ much, and it's not going to be the same environment for them. Inflation is still out there, and these companies are feeling it. So that's my point. That's why I bought a little bit of a put, saying, okay, probably into the year of end, if we get a little bit of a volatility, we had already pretty big volatility in bonds, but if we have a little bit more, this stock can go into low 20s. But again, if I lose money, no problem. But that's what I'm watching. That's the video for Pfizer. Thanks for watching. See you in the next one.